The 2022 stock market crash continues. We just had the worst single-day crash in the stock market since June 2020. This was after a hotter than expected inflation report which all but ensures continued large interest rate increases. This decline sent my portfolio down significantly. It's red across the board with some stocks down 5 to 7% all in a single day. However, these large declines from Mr. Market can lead to great buying opportunities for the intelligent long-term investor. There are plenty of companies trading at attractive valuations. For dividend-focused investors, there are two distinct offerings: the lower yield stock with fast-growing dividends or the high yield stock with slower growing dividends. Both are valid and your preference may differ based on the opportunity and your unique investing plan. In today's video, I'm going to discuss 3 high-yield dividend stocks that I think are a good value to buy now. One of these stocks has a dividend yield over 8%, one has over a 7% yield, and the other has over a 6% yield. The stock with the highest dividend growth rate may surprise you. If you stick around to the end, I have a bonus stock to share. Let's roll the intro. My name is Zach and you should leave a like and subscribe to the channel if you enjoy the video. Throughout this analysis, I will use my research software available at dividenddata.com. This tool lets me track my entire dividend portfolio and conduct in-depth research on over 8,000 stocks. You can sign up with the link in the description. There's a 30-day money-back guarantee, so no risk in trying it out. If you have the software, you can follow along and research some stocks with me. First, we have the Altria Group, ticker symbol MO. The current price is $41.76, with 1.8 billion shares outstanding, valuing the company at $75.2 billion. The trailing annual dividend is $3.60 at an 8.6% dividend yield. They just announced a dividend increase of 4.4%, bringing the current quarterly dividend to 94 cents per share. That makes a forward-looking annual dividend $3.76, giving it a nearly 9% dividend yield. This is a great value considering how reliable this dividend is and its impressive track record of dividend growth. If you're wondering what this major drop-off in 2008 is from, that represents Philip Morris International being spun out, dividing the two companies. So that was not actually a dividend cut. Altria is a dividend king, meaning they have increased their dividend payment on an annual basis for over 50 years. So what does their business look like today? They own Philip Morris USA, whose brands have 48.8% market share in US cigarettes. Their top brand, Marlboro, has 43.1% market share. Cigarettes are definitely the cash cow for Altria, but they are becoming increasingly more diversified. They own US smokeless tobacco, which has 47.8% of the oral tobacco product segment. Altria owns John Middleton, which is a leading pipe tobacco and cigar company. They own 80% of Helix Innovations, which sells on nicotine pouches globally. This is an increasingly popular oral tobacco category. Altria has made other significant investments varying in success. They own a 10% stake in Anheuser-Busch InBev, which is a leading alcohol company with great brands. However, the company's value has declined a sizable amount since investing. They own 35% of Juul Labs, which has become nearly worthless due to lawsuits and the recent FDA ban. I made an entire video about that linked here. Altria owns a 45% stake in the Kronos Group, which is a leading cannabis company. This has also fallen significantly in market value. However, I do see this strategically as a great decision and category for Altria to grow into. The eventual federal legalization of marijuana in the United States will likely be a huge opportunity for the company. All these investments have declined in value, but signal the right strategic decision for Altria as they diversify away from cigarettes. These investment losses have caused Altria's GAAP earnings and net income to be suppressed in recent years. However, those are on-paper losses, and the company's non-GAAP earnings and free cash flow have continued to grow. This is fueling their dividend growth, which is sustainable. Here you can see the growth of their non-GAAP earnings per share over the last decade. Their free cash flow per share has grown at a 10% 10-year compound annual growth rate. In fiscal 2021, Altria generated $4.43 per share in free cash flow. At current prices, the free cash flow yield is over 10.5%. This is the most important metric. It's the money that fuels their dividend payments and share repurchases. The company regularly repurchases shares, increasing the relative value of each share. The dividend growth is so impressive. Over the past 10 years, the compound annual growth rate of the dividend is 8.15%. The two most recent dividend increases were 4.65% and 4.44%. That is fantastic growth considering the stock's starting dividend yield is nearly 9%. There are not many high-yield stocks that grow their dividend at the rate of Altria. The most impressive part is that all this has happened while smoking rates are declining massively. From 1965 to 2018, smoking rates have declined from 42.4% to 13.7%. However, Altria has continued growing its earnings by raising prices. They have major pricing power. According to the US Bureau of Labor Statistics, prices for cigarettes are 450.65% higher in 2022 versus 1997. During that time, cigarettes experienced an average inflation rate of 7.06% per year. Altria just happens to own Marlboro, the most popular and most expensive brand. This gives them huge pricing power. Altria's business model is extremely robust in a time of high inflation like 2022. In my opinion, it's one of the best high-yield dividend stocks you can own. I own the stock and have been adding to my position in recent weeks. However, many people have moral objections to investing in a company like Altria. Luckily, I have two more stocks to analyze in today's video, both of which I own. Stick around to the end of the video for a bonus stock. But first, a message from our sponsor. Great investors always seek to diversify their investments. Today's sponsor, Masterworks, can help. Masterworks is the platform for investing in contemporary blue chip art. Traditionally, purchasing iconic artwork was only accessible to the uber wealthy. Masterworks is the first platform for buying and selling shares representing an investment in iconic artworks from world-renowned artists like Picasso, Banksy, and Monet. Masterworks has sold 5 paintings since 2017 with an average net return of 26.8% to investors. Contemporary art prices outperformed the S&P 500 total return by 164% over the past 26 years. By using Masterworks, you can build a diversified portfolio of iconic works of art curated by an industry-leading research team. There's currently a waitlist to sign up, but with my code, you can skip the waitlist and start investing today. By investing with Masterworks, you will diversify your portfolio and join the 250,000 people who have already signed up for Masterworks. Check out the link in the description to start investing today. Now let's get back to the topic of the day. 3 high-yield dividend stocks. Stock number 2 is Enterprise Product Partners, ticker symbol EPD. The current price is $26.73 with 2.1 billion shares outstanding, valuing the company at $58.25 billion. The forward-looking annual dividend is $1.90, giving it a dividend yield of 7.1%. The company has reliably grown its earnings per share over time. EPD is a midstream oil and gas company. This means they specialize in the processing, storage, and transporting of oil, natural gas, and natural gas liquids. On their website, you can see this cool map showing where all their pipelines and facilities are. The nice thing about EPD being a midstream business is that their earnings are less directly impacted by the price of oil and natural gas. This makes EPD less tied to commodity price fluctuations. You can see their earnings are much more consistent than companies like ExxonMobil or Chevron. Net income per share has grown at a 5.4% 10-year compound annual growth rate. In the past 3 years, EPD has started to generate consistently high free cash flow. This makes their dividend payments far more sustainable. If we look at their quarterly cash flow statement, they are paying out around $1 billion in dividends. Over the past 4 quarters, they've generated over $1.7 $7 billion in free cash flow. This is leading to increased dividend growth. The company reliably increases its dividend on an annual basis. However, EPD has had 2 dividend increases in the past year, a 3.33% raise and a more recent 2.15% raise. This is great for a high-yielding stock like EPD. Over the long term, expect dividend growth to be low but reliable. One thing to know about EPD is that they are an MLP, which stands for Master Limited Partnership. This corporate structure makes it a pass-through entity, meaning that they don't pay corporate tax and its distributions to shareholders are instead taxed as income tax. So you don't get the benefits of the lower qualified dividend tax rates. You'll get a K-1 tax form in the mail and it adds an extra step to your taxes. I've done this a few times and it's not that crazy, but it's definitely something to keep in mind if you choose to invest in EPD. Stock number 3 is AT&T, ticker symbol T. The current price is $16.77 with 7.12 billion shares outstanding, valuing the company at $119.5 billion. AT&T is a stock we've followed closely here on the channel. It's been a long saga and overall is a money loser for me. However, I still think that at the current price, AT&T offers a good value, especially if you're looking for a high yield stock. What you need to know about AT&T is that they just spun out Warner Media. That has now merged with Discovery, forming Warner Bros. Discovery. So AT&T is now exclusively a telecom business focused on growing its wireless and broadband subscribers. This transaction lowered their debt significantly, albeit still large. However, at that time, they decided to lower their dividend payment, breaking their long history of dividend growth. They lowered it more than the logical adjustment of missing Warner Media because they plan to reinvest at high rates into growing their telecom business. The new quarterly dividend is $0.278 per share. This makes the forward-looking annual dividend $1.11, giving it a dividend yield of 6.62%. That is still a very high and sustainable dividend yield. AT&T has only reported 1 quarter since the business change. That was a mixed bag where they beat expectations on subscriber gains, but spent more money than expected, lowering their free cash flow. I made a whole video discussing that in depth, linked here. I do think that in the coming years, AT&T will be a free cash flow machine. I also would say that their new dividend payment is very safe. Now that they reduced their dividend, I'd expect continued slow but reliable dividend growth. AT&T management has even hinted at the possibility of share buybacks in the future. It's been an ugly ride so far, but I'm holding on to my AT&T stock and collecting those dividends. Right now may be a good entry point as the valuation is so low and much of the drama seems to be in the rearview mirror. The bonus high yield dividend stock that I'd like to share today is Verizon, ticker symbol VZ. This telecom giant is very similar to AT&T, which I just mentioned. However, it has not had the same drama, spin-offs, and dividend cuts. Verizon has continued growing its dividend on an annual basis and actually recently announced a 2% dividend increase. The trailing annual dividend is $2.56, giving it a 6.2% dividend yield. The forward-looking annual dividend is $2.61, giving it a 6.32% dividend yield. Expect slow but reliable dividend growth moving forward. I don't own any Verizon stock, but that's mainly due to my large allocation of AT&T. I own all 3 of the stocks discussed today in my long-term dividend growth stock portfolio. However, don't take my advice blindly and be sure to do your own research before making any investment decisions. Thank you for watching Dividend Data. You can sign up for dividenddata.com to track your dividends just like me and join a Discord community of like-minded investors. If you follow me on Twitter, link in the description, you can get real-time dividend news along with my buys and dividends coming in. Please leave a comment below and thank you for watching.